I want to bring in Alan Nuckman, who is joining us from Agora Financial. Alan, I know you like to talk the broad market. Let's do that. Before we get to your trade, this morning we see the NASDAQ strengthening again. And overall, a pretty quiet session, though, despite some swings around the vaccine update from AstraZeneca.
Yeah, but you talked about Pfizer, and I think that's a stock that if you look at the chart, probably it's been laying in the weeds and looks like it could have a little growth spurt here. But why I'm bringing them up is because what happened last week was significant. Is the Dow stock started to participate in this rally? We again made new all-time forever highs in tech last Monday. But what I saw that was most impressive is the Dow, which has really been a dog, has started to participate, and you're seeing a little bit of that correlation tighten.
Alan, when you look at the overall divergence that we saw last week, a little hint that maybe the market can tolerate moves in small caps, is interested in the kind of cyclical play. How do you look at that as potential real rotation? I mean, right now, is it still looking at the big tech names, or are you curious about trying to make plays elsewhere?
Well, it's simple. It's just you want to look at stocks that haven't already rallied, and they offer better value if they catch up, obviously. So that's the game that everybody's playing now, is looking for those diamonds in the rough, and you're able to see, some of those stocks come back as well. It's hard to keep buying new highs in tech stocks. Whereas it's easier from a risk-reward standpoint to look at some of those other plays. But that's a very positive, healthy sign that we saw, this breakout, so to speak, in the Dow, and we'll look to see if it can follow through.
All right, you're looking at one today. I don't know if this is lagging or out front. How do you describe Twitter, Alan? Because it's sitting at the highest post-recovery that it's been.
Right. But Twitter's still 25% off its highs of 2 years ago. And the stock's actually negative in the last year of trade. Compare that to tech, which is up 25% in 2020. So this, again, is a play in those terms. If you look at it, big picture, it's traded between 20 and 40 for the last 8 months. So that makes 30 a very important price pivot to lean on. So I'm looking at the $30 call for September. Now, this is not an earnings play, even though earnings are coming out soon. This is a longer-term play, and the September option gives you some more time to ride through any ups and downs. But what I'm doing here is the usual stock substitution, an in-the-money call, the 30 strike, which is, almost $6 in the money or so, at $6.50, I think. And it's trading about $7.50 or $8. So the break-even, the expiration break-even is only $1 away. And the September option is only an extra $50 more than the August option. So when in doubt, buy more time. Time is your greatest asset.
All right, so buy more time. Twitter, 2.5%. Alan, you're basically looking at the usual Nuckman style here, right? The in-the-money stock replacement. Do you have a target in mind where you bail from Twitter?
Well, I would use money management on any option, and I would just look at Twitter, and if the option loses half its value, it's probably a good time to evaluate and decide either you're running out of time or the market's gone the other way. So that's how I look at things, but I think we could get some solid follow-through here and another attack on this upside. Again, the earnings could be a catalyst, but I really like the price performance here, and there's a lot of smart money. That's what I follow. I follow the smart money. They're loading up on this, on positions in Twitter. So somebody sees something, and I'm trying to piggyback on that knowledge. But I also really like the risk reward, and I really like the chart pattern. And again, it's an in-the-money option that has limited risk and plenty of time for development. Okay, Alan Nuckman, good to catch up. Like the trade. Twitter up today, 2.5%. Mr. Nuckman joining us from Agora Financial. Let's continue our conversation about tech and every corner of it. When we get back, we'll take a look at more of the payments, the credit card situation, and what it means as we see transition from banks under pressure and every tech stock tied to payments running wild. We'll be right back.